Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Friday, January 23rd, 2009. UK fourth quarter GDP came in worse than expected, contracting 1.5% on the quarter and down 1.8% in annualized terms. Expectations had been for a 1.2% quarterly decline. It's the second quarter in a row that growth has been negative, putting the economy into the technical definition of recession, though the fact that it has been in recession has been acknowledged by the government for some time now. The fourth quarter decline in growth is the weakest reading since 1980. Service industries shrank by 1%, manufacturing activity declined 4.6%, and construction was down 1.1%. Retail sales in the UK, meanwhile, surprised analysts and economists by increasing 1.6% for the month of December, suggesting a strong Christmas shopping season. However, there were some cautions with the data, as a cut in value-added tax, aggressive discounting, and very early Christmas sales cast doubt on the accuracy of the data. The annual rate in adjusted terms was up 4%, but was only up 1.8% in unadjusted terms. Retailers will surely be surprised by the data, as they reported very weak Christmas sales. The pound felt the pressure in the wake of its GDP release, falling to a 23-year low against the greenback. The pair slid 400 pips from its high to start the global session around 1:30 until it hit support at 1.25 in the late European session. That extends the losses for the pound that were heaviest at the start of the week. As of noon New York time, the pound was down almost 1,200 pips since Monday's open. The pound also hit a new record low against the yen, setting a new low near 118.80. The slide from high to low here was equivalent to 500 pips, and since touching 135.50 to start the week, we have plunged as much as 1,600 pips. The current weak environment in the world is spurring investors to take refuge in the safety of the yen and the dollar. The manufacturing and services sectors in the Eurozone contracted for the 8th straight month, preliminary data for January showed. Manufacturing continues to be pressured by weaker demand from abroad and poor spending at home as a result of the global recession. In a bit of silver lining, however, the pace of contraction in the sectors slowed. The manufacturing PMI rose to 34.5 from 33.9, and the services PMI increased to 42.5 from 42.1. If this means the Eurozone's negative growth peaked to end the fourth quarter remains to be seen. The better-than-expected Eurozone PMI data did not give the euro a boost whatsoever in the European session. Instead, the euro-dollar pair hit a fresh low for the week near 1.2765, the lowest level since December 9th. Fresh concerns over global growth and the health of the global financial system have given the greenback new strength as a safe haven. The euro did manage to rally in the late New York afternoon, which brought the pair back to where it started the day. In Canada, consumer prices fell more than expected for the December period. Prices are down 0.7% on the month, and the annual rate cooled to 1.2% from 2%. It was the smallest increase since January 2007 and reflected a sharp 26% decline in the price of gasoline compared to a year ago. The US dollar-Canadian dollar pair fell in favor of the loonie despite the bigger-than-expected fall in consumer prices there. The pair reached overbought levels on its momentum indicators near the 1.27 level and began dropping the later half of this week. Today saw a surge in the loonie as it prepares to release its budget deficit figures next week, which should be smaller than that of other countries. That news, plus a surge in gold prices, helped the loonie gain 350 pips after it tested its newly established downward sloping line of resistance near 1.2650. During the session, the pair fell all the way to 1.2265 before retracing just slightly in late New York trading. The main highlights from next week's fundamental docket includes the conclusion of the FOMC meeting on Wednesday, which should give traders further direction in regards to how the Fed will act to help shore up the financial markets, which have experienced a renewed sense of risk aversion, especially at the beginning of this week. Other important releases from the U.S. include existing and new home sales, durable goods orders, and the first release of fourth quarter GDP. And that wraps up this week in the Forex markets. Thank you for joining us here at CMSFX.com, and we wish you a great weekend.